You hear about governments and world leaders making headlines. Wars, pandemics, elections. But what if the most powerful, least noticed force shaping our world isn't a nation, or a war, or even a giant corporation? What if it's an asset manager, an accounting firm? No, it's BlackRock. And the question that haunts the corridors of power and your own retirement savings is this: how did a company known for managing money become more influential than most governments without holding a single office or drafting a single law? Tonight, we uncover the secret. We reveal how one quiet company, BlackRock, built a machine so powerful it now dictates markets, influences policy, and subtly controls the very future of our planet. It's a story of algorithms, ownership, and the silent takeover of the world. Prepare yourself. This story begins not with a bomb, not with a revolution, but with a quiet revolution in finance. In 1971, a man named Peter Peterson, with a background in investment banking, founded BlackRock. His vision was radical. Instead of trying to pick winners in the stock market, which was chaotic and unpredictable, just buy all the stocks, index them. He proposed a simple idea: create giant funds called Index Funds Group, IFG, that would own everything in the stock market in proportion. This was called passive investing. It was boring, it was efficient, and it was cheap. Unlike active fund managers who charged high fees to try and beat the market, often failing spectacularly, BlackRock offered low-cost, broad exposure. Fast forward to today. BlackRock doesn't just manage money. It owns a huge chunk of the world. Their assets under management, AUM, today are estimated at over 23 trillion. That's more than the entire US GDP. It's roughly equivalent to the total value of all private homes, or all global agricultural production, or every car ever made. They control more wealth than most nations' economies combined. This wasn't just about funds. It was about who owned what. And that ownership, Peter Peterson understood, is the key to influence. So how does managing trillions give you control? It's not about printing money. It's about who owns what and how that ownership is exercised. Think of ownership like a vote in a democracy. Every share you hold gives you a say in the company's decisions. BlackRock bought up massive amounts of shares. They own huge chunks of global companies, Apple, Microsoft, Vanguard itself, through their massive index funds. But owning shares isn't just passive. To manage these huge holdings, they need proxies, legal representatives, to vote at shareholder meetings. And BlackRock provides these proxies for all their clients. Millions of individual investors, pension funds, institutions. Their votes are aggregated and directed by BlackRock's algorithms. This is the first lever, proxy voting power. BlackRock wields the collective vote of their clients like a digital gavel. They use sophisticated software, their environmental, social, and governance ESG voting platform, to push their agenda or block unwanted ones on issues ranging from climate change to human rights, often representing the views of entire countries' pension funds. Then there are exchange-traded funds, ETFs. These aren't just funds. They are financial instruments. When you buy a share in a BlackRock ETF, like the iShares Core SP 500 ETF, ITOT, you're not buying shares in 500 companies directly. You're buying a digital certificate that represents a claim on a portion of the underlying index. But crucially, this ETF itself can be bought and sold millions of times a day, like a stock. And BlackRock trades these ETFs constantly using complex algorithms. This creates immense liquidity and price movement, often dictating short-term market direction. And then there's algorithmic trading. BlackRock's research and quantitative investment teams run sophisticated algorithms that automatically buy and sell stocks based on complex rules and data analysis. These algorithms execute trades in milliseconds, often in response to market news or price movements. They account for a significant and growing portion of daily trading volume, sometimes called the digital blood of the markets. Their collective actions shape prices and sentiment constantly. For decades, this quiet power grew largely unnoticed. But a few years ago, a critical mass was reached. It wasn't a scandal, but a shift in influence. The 2008 financial crisis proved BlackRock's passive approach was resilient, actually. Then came Brexit. BlackRock's algorithms, managing vast sums, reacted instantly to the uncertainty, causing market jitters visible worldwide. Their proxies, holding billions in UK pension funds, were suddenly crucial players in the political economic standoff. The real turning point, perhaps, was the COVID-19 pandemic. Markets crashed, uncertainty reigned. BlackRock wasn't just managing assets. They were actively shaping the response. Their algorithmic trading systems absorbed and distributed risk globally. Their ESG platform, suddenly relevant as companies faced pandemic-related supply chain issues and workforce disruptions, provided guidance for BlackRock clients on responsible investing during a global crisis. Their influence wasn't just passive anymore. It was active. And then there's the sheer scale. When a BlackRock ETF moves, it moves markets. When BlackRock tells its clients to shift investments towards ESG criteria, entire industries feel the pressure. They aren't just a player. They are now the system. Their algorithms manage trillions, their votes shape corporate policy, and their sheer size means their actions ripple through the global economy. This quiet dominance, built over decades, became undeniable. BlackRock wasn't just taking control. They were demonstrating an unprecedented ability to navigate, shape, and even dictate the global economic narrative. So what does this global behemoth mean for the rest of us? The consequences are far-reaching and often unsettling. First, market volatility is amplified. When BlackRock's algorithms sense risk, they move trillions. This can cause sudden, dramatic swings in the market, affecting everything from retirement savings to small business loans. The system becomes more fragile, more susceptible to these algorithmic decisions. Second, influence over policy and morality. Through their proxy votes and ESG platform, BlackRock directs the conversations of entire industries. They decide which companies exist based on climate risk or human rights records. While aiming for responsible investing, critics argue this gives BlackRock and its clients undue control over ethical standards, often masking complex financial motives. The line between corporate social responsibility and BlackRock's profit-driven agenda blurs. Third, the paradox of safety and control. BlackRock's passive funds offer stability and low fees. But this very stability is derived from collective ownership by millions, managed by one giant. Is safety worth the surrender of individual agency? Is the illusion of control through diversified ETFs real, or just a sophisticated illusion created by BlackRock's machine? Fourth, exacerbating inequality. BlackRock's success story is one of scale and efficiency. But does it help the many, or just serve the interests of the already wealthy institutions and individuals who entrust their money to it? The fees, while low for huge sums, still represent billions extracted from global capital each year. The benefits of BlackRock's dominance might not be evenly distributed. And finally, the silent takeover. BlackRock operates in the shadows, unseen by most. While governments debate trade wars or pandemics, BlackRock is quietly shaping the underlying economic structure. Their influence is structural, systemic. They control not just assets, but the means of allocating those assets globally. For 50 years, BlackRock followed the path laid out by Peter Peterson. Buy everything, keep the fees low, let the algorithms run. It worked. It became the world's most powerful asset manager, arguably the most powerful financial entity on the planet, operating with a quiet efficiency that belies its impact. The unsettling truth is this: the world is increasingly run by algorithms and ownership stakes. BlackRock didn't conquer the world by force. It conquered it by becoming the indispensable network. They didn't fight wars. They shaped the terms of peace and conflict through finance. They didn't make laws. They interpreted ownership as influence. They didn't solve problems. They defined the problems worth solving through their lens of passive investment. Is this the future? A world where financial power, wielded by quiet giants, dictates our economic and perhaps even our social destiny? The choice isn't between BlackRock and democracy. The choice is whether we understand the mechanics of this new global order and demand transparency, accountability, and perhaps a reckoning. So what really is BlackRock's secret? Is it technology? Is it ownership? Or is it something more insidious? We've explored the mechanics, the influence, the consequences. But the real question, the one that might change your understanding of the world, is this: do you feel safer or more vulnerable, knowing that the world's biggest asset manager, BlackRock, quietly controls more wealth and influence than most governments combined?